Good day, everyone. This is Gary Ender with ShrewdTrading.com, and I wanted to come back and talk about the S&P 500. You heard me talk several days ago about this rising wedge that's developing in the S&P 500. And that pattern is still intact right now. As a matter of fact, we've moved from the highs at the top of the rising wedge down to the lows at the bottom of the rising wedge. And if you were a Market Check member, we actually talked about the day that we had this doji, and on Thursday, when this lower price was rejected. We see this lower shadow. It rejected the lower price, and we ended up closing right on the trend line. As a matter of fact, from the short that I initiated towards the top, I actually took 25% on the doji. I took 50% off when this started moving back up, and I took my final 25% off towards the close on Thursday. And I was talking to all the Market Check people. Matter of fact, I started talking when we saw the doji. Be careful, there could be a potential bounce, but we didn't see that on Thursday. On a Thursday, it worked its way lower. It looked like it wanted to break down. But of course, the closing price is the important price. It worked its way back up, closed right on the trend line. And then I was talking on the Market Check feature on ShrewdTrading.com that we're set up for a bounce. We see what happens on Friday. That was not a surprise to any of our Market Check people. They were well prepared for a potential bounce on Friday. As a matter of fact, in the Shrewd Shout box, which is one of the features for Market Check, they had the opportunity to see me take a trade in the euro dollar within just a few pips at the bottom. And actually, some of those people played along as well, playing the euro, playing the cable, or playing in the futures market. And it's always exhilarating when you see a really nice move like this and you're in the game on the right side of the trade. This weekend I talked to a friend of mine who practices Elliott Wave. He was saying the next move could be a big turn down that could run a long way to the downside. Now, we still have this bearish wedge in place, so that doesn't surprise me. But as a swing trader, what I like to do is maximize all the swings. So if we can play this to the short side, we can play this to the long side, play it down short again, return to the upside and play down to the short side again, and now play the long side again. We can rack up a lot more profits that way than if we're waiting for something to happen, whether he's staying on the short side because he doesn't want to miss that down move, or he's sitting in cash waiting for this next turn down. Because what is the next resistance point? We see the big green candle that we have, and sometimes the day after or sometimes 2 days after we have a big candle like this, we actually retrace a little bit. So it's not going to surprise me at all if maybe we work our way back to the 10-period moving average, maybe back to 1350. That doesn't have to happen, but it's certainly not going to surprise me at all if that does happen. And that should be an opportunity to actually put additional long positions on. Unless, of course, we get some severe price action. But the resistance, we have some weak resistance over here around 1365. We have much stronger resistance around 1375 where we see the swing high here. We also see the upper Bollinger Band. If it gets above that, we see that this upper trend line of the rising wedge continues higher. Right now it's up around 1400. Just above that we have 1415 and 1425, a zone from the highs that we have over in here. I also want to show you a different way that we can look at this. I just took the trend lines off the chart and I put linear regression channel on. Now this middle line is the linear regression. The channel is made up from the lower line and the upper line, which are 1.5 standard deviations above and below the linear regression line. We actually see how this fits pretty well with the rising wedge trend lines that we have. We see that the upper line of this, which could be a potential target, is actually just a little bit higher than the trend line that we had showing the top of that rising wedge. So price could move up to the regression line. It could move up to the upper Bollinger Band where we see the high over in here, or it could see the top of this linear regression channel. But those are just two different ways of basically looking at the same thing. The point is, even if you're bearish in the market, like many people are that I talk to right now, this is not the time to be bearish. This is the time to be patient if you're bearish on the market. Allow this leg or this swing to finish. Let's see where it finishes. We're not going to know where this is going to finish. I can point out different resistance points, but we're not going to know where it actually finishes until we see the market starting to turn over or potentially starting to stall. As you know, oftentimes when a market moves higher, it'll stall before it turns over. So we'll evaluate The price action, I'll be talking about this in Market Check every morning and every afternoon to determine where I think this market is going to finally turn over that will allow us to cover the long positions and put short positions back on. And if the Elliott wave people are right, maybe it breaks out of that rising wedge this time or below this linear regression channel. The whole idea of Market Check, which is one of our features on True Trading and TrueTrading.com itself, is to keep you on the right side of the trade, give you warnings when the market might be turning, and then you have the opportunity to participate in those market turns and those market swings. If you haven't looked at Market Check, take a look at it right now. We still have our introductory prices in place, but those are only going to last for a few more weeks. This is Gary Ender from ShrewdTrading.com. Good trading next week, and stay on the right side of the trade.